of the computer. Hello, everyone. This is Randy, in case you've forgotten. I have Cern Basher. Nobody's forgotten him because he's the guy with the charts and the graphs and all the interesting stuff that helps us understand the stock, Tesla, understand the economy, understand the stock market, which is what the channel's all about. So Cern is a perfect Thursday addition to what we're doing here. Cern, what do you got?
Good morning, Randy, or maybe it's good afternoon at this point.
Good
But
afternoon, barely. Yes, good afternoon. Yes.
hello to you in Canada, my former homeland,
Yes, indeed. One of your many.
one of my many.
Yes.
That's right. Now it's a great place.
Is it colder at the tip of New Zealand than it is in Montreal?
No,
No.
New Zealand is surrounded by ocean, and even in the coldest place, not nearly as cold as Montreal could be.
Yes. I've been in Montreal and Toronto and Buffalo and Chicago. And those are probably the four coldest days of my life in,
Hmm.
in previous years. Yes.
Yeah, don't make the mistake of going there at the wrong time of year.
Right.
Beautiful places in certain times of year.
Right.
Yeah.
Okay.
Well, speaking of going places, let me share this with you.
Okay.
This is apparently seen out on the road by somebody somewhere.
Okay.
My theory is that this is Scott Walter's new set of wheels.
I'm sure that must be it. He drew it with crayon, right?
I'm going with this theory until proven otherwise. But yeah, it seems like something that Scott would do to a Cybertruck.
Wow. Wow. Yes, we have to have a conversation with whoever came up with the design. Yeah. Okay. That is,
I love it in the sense that the Cybertruck is this canvas that you can
yes.
put whatever you want onto it. That I think that's kind of neat.
Yes, that's true. But putting whatever you want, there should be, somebody should have some discernment. Oh, oh,
Right. Yeah. Okay. So moving on from that,
yes. Please,
let's talk
please
talk
do.
let's talk about some investment topics. I thought this was kind of cute. And by the way, today I'm going to bring a lot of cartoons.
Okay.
I apologize in advance for that, but some of them are just too good not to share. So we've got a couple of, I guess, fruit flies here, an investing process. Nah, it's just trust my gut.
Yes, yes.
So
Venus
probably,
flytrap. Yes,
yes, probably a little dangerous, but yeah.
indeed. Yes, trusting his gut.
So speaking of trusting one's gut, after the earnings call Tesla had, the stock for some reason jumped up,
Yeah.
right? And so all those people that were listening to the narrative of the prior week, who may have sold, suddenly might have quite a bit of regret at this point. This is over the last 10 days. The stock is now up about 20% in the last 10 days. And I think since the earnings call, maybe up 26, 27%.
Yes. I've commonly said, there's an old Hebrew saying that says that you should never cry over a profit, but I suppose the opposite is not necessarily true.
Yeah. Yeah. And I think too, it's always important to take a little bit longer term view. This is just 5 years, which really isn't even that long of a period of time.
Yeah.
But Tesla stock is up over 1,000% in the last 5 years.
Yeah.
And having said that, it's down 56% from its all-time high.
Exactly.
So good and bad in one image here.
Yes. It's a Go ahead.
Yeah, and I was just gonna say, I think last week we showed a cartoon with the comment was the Tesla stock was full self-driving and it was showing a picture of the stock price going down.
Yeah. Yeah.
And what a difference a week makes. We now have a cartoon of a bear on life support, perhaps, with the stock going up.
Yeah, and I did comment the other day that I don't think any of us should get too, you know, self-congratulatory because these things can turn so fast. And so
That's right.
I think the trend should be up. I'm sure you do too because of robotaxi. But all it takes is one comment about I don't know firing the supercharger staff, and you might get a little correction.
Yeah, yeah, we have little bumps in the road all the time. But here's some breaking news for you from South Korea.
Okay.
Tesla apparently has received permission to trade emission credits in South Korea.
Oh, wow.
And by the numbers in this article, I think it was worth potentially up to 145 million
Per year.
per year.
Okay, good.
Um, I'm not sure about the per year part. It might just be for the
Oh,
number of credits that Tesla has accumulated.
oh, I see. Okay.
So it may not be per year. But anyway, it's another opportunity to earn a little bit more money from some of Tesla's competitors, which
Yes,
basically pay Tesla. This is free money for Tesla they wouldn't otherwise receive.
right.
And the way I think about it is it goes to help funding Tesla's capital expansion plans
Exactly. Yes. Or whatever you wish.
or whatever you wish. Yep. And then in further breaking news, pun intended.
By the way, wasn't there, I don't know, did you pick up the other South Korean news? No, no, it's, yeah, you don't have to go back. I'm just saying that I think South Korea also says they're looking very hard at FSD and might approve it for South Korea.
Yes. Sorry. Yes, I did see that.
Okay.
Yeah, you interrupted me though in my joke here. In other breaking news,
Oh, oh,
Tesla has laid off its entire team behind brakes.
I see. Yes, yes. Well, they were taking too many of them.
Yes,
Yes.
that's right. This
You
is
love
actually
that.
something that Scott posted, so I thought I would include this. This is probably the most important thing Scott posted all of last week.
Now, I don't believe he took any shots at you yesterday. I'm not sure,
He
but
didn't. I was disappointed. I guess he's forgotten about me.
I
That's
think
terrible.
so. Yeah, that's right.
Yeah. We've looked at this chart before,
Yep.
and this is something that AJ puts together. He does a nice job of tracking the free cash flow history for the pure EV makers.
Right.
And the changes on here, certainly for Tesla's last quarter, where we've got a little bit of a step down here from the
Mhm.
peak.
Yep.
But he's also added Xiaopeng, which had positive free cash flow, and NIO, which is slightly positive free cash flow for the quarter. So whether those represent the turn for those companies remains to be seen.
Yeah.
So this is something interesting, worth watching. So far, Tesla's the only company that's made the turn
Right.
and cumulatively free cash flow positive.
And if he added a major, the other biggest BYD, hello, BEV player, BYD, they just had, or are you going to go on to that? Am I getting ahead of myself?
I am not today. I had to cut
Okay.
some material, and unfortunately, that's on the cutting room floor.
Yeah, so they actually, I don't think they went negative, but their free cash flow dropped a ton this quarter.
Yeah. So anyway, it's not looking so good for some of the others as
Right.
well. Um, we've seen this chart before as well. We discussed this, I believe, last week.
Yes.
This has now been updated with some other automakers. I think Kia and Ford is now on here, and then perhaps Toyota as well.
Hmm.
And Tesla's here kind of more in the middle, down 20% quarter over quarter.
Right.
And it's not, especially when you compare it to other BEV divisions of these other car companies, it's actually kind of, pretty strong relative performance.
Right.
But even if you compare it to just some companies' total business, it still looks reasonable.
Hmm.
The one standout here is Toyota. They are killing it in BEVs. They were up 9% quarter over quarter,
Yeah.
um, with 30,000 units.
Yes. Yes.
So let's dig into that a little bit more. And this is again courtesy of AJ. This is going to be kind of AJ corner today in
Indeed.
today's video. So globally, Toyota had a 12% decline quarter over quarter in their sales.
Right.
So it was a tough quarter for them too,
Right.
right? And Toyota is the largest automaker by volume in the world, with Volkswagen being second. So something was definitely going on in the auto industry in the first quarter.
And it appears to be bleeding into the second quarter at this point.
Could be. Yep. When we focus on Toyota's BEVs, battery electric vehicles, this is just taking the country of Germany as one data point. With the Model Y on the top, and you can see the growth in the Model Y is just basically almost this vertical line
Right.
up when they started selling in Germany, and it's now the leading EV make and model in Germany.
Hmm.
And if you drop all the way down to the bottom of the list,
Yeah.
AJ's highlighted it for us, but Toyota, their BZ4, which is their flagship battery electric vehicle, just under, well, less than 5,000 vehicles sold.
Right, right,
Cumulative sales since launch,
right,
not in the quarter,
right,
cumulative.
right.
So Toyota has a ways to go when it comes to electric vehicles. And then this is their cumulative global BEV sales. Sorry, this is trailing 12 months. Trailing
12.
12 months BEV sales for Toyota, 117,000 as of the end of March.
Yeah, at least they are apparently seeing increases on that trailing 12-month. Yeah,
They are, however, when you compare them to Tesla, which
yeah.
has trailing 12-month sales just under 1.8 million, which is 15 times larger, or Toyota sales are only 6.5% of what Tesla sales are.
Well,
It's pretty weak.
I understand that they're considering another change of leadership. That's a joke. That's an Onion headline.
Well, they probably need to. Yeah. Yeah. So anyway, that's worth watching. I thought this was just interesting. This random data point from Mercedes-Benz. This chart compares how much they're spending on R&D versus how much they spend on selling their vehicles.
Oh, interesting.
Now, Tesla famously spends very little on selling its vehicles in terms of advertising and marketing expenses. Not zero, but very
Yeah,
little.
yeah,
And Mercedes-Benz spends a multiple of what they spend on R&D
right.
selling their vehicles.
Mm-hmm.
And this is, not just one quarter, but over a long period of time.
Yes. This is, I think, more traditional how the auto companies all operate.
Yep. Yep, certainly is. They've got to convince people to buy their vehicles. Okay, one of many cartoons to come. Two guys sitting at the bar here. Everything is wonderful if you don't pay attention.
Yeah,
I
yeah.
guess it's the breakfast diner where they catch up on the daily news, but one guy isn't so worried about it. And that might not be a bad way to live. Um, so the topic of free cash flow has been discussed quite a bit lately, and this is some work that AJ did on Amazon.
Mm-hmm.
And he's saying here that the cumulative free cash flow that Amazon has earned since inception in 1994 is, sorry, our screen is blocking my view here, is $94 billion.
Right,
Which you look at this and you say, okay, that seems like a pretty good amount of money,
right.
right? But when you dig a little deeper, he compares this now to Apple.
Mm-hmm.
So he's saying Amazon's dirty little secret that Apple generated more free cash flow in 2023
Yes,
than Amazon has over its entire life as a public company.
exactly.
Okay. It became public in May of 1997, but it's been around since 1994.
Right.
So Apple generated almost $100 billion last year in free cash flow.
Mm-hmm.
And, you know, Amazon's cumulative is 94. So, and he continues here in further posts with some more details. So Amazon has generated almost 400 billion in operating cash flow, but free cash flow is operating minus your CapEx, your
Right,
capital expenditures.
right.
And Amazon has invested over 300 billion in CapEx. So while they've made quite a bit of money as an operating company, they've had to reinvest the majority of that money.
Mm-hmm. Mm-hmm.
Now, in a post I did yesterday, I said a joke that Amazon must be going for world domination if they're investing that much. But it's the nature of the business that they're in with both the retail business requires heavy investments and also the
Yes.
cloud computing business requires heavy investment as well.
Yeah.
So it remains to be seen whether this pays off for them long term in terms of free cash flow generation, but it pales in comparison to Apple, which has pretty consistently generated a lot of cash flow each and every year.
Right.
And last year was down from the prior year, but it's still, their second highest ever.
So this, I can add a little bit of color on this as well. So Apple is by far the best company at return on invested credit. Nobody's even close to them in terms of return on invested credit. But if you wanted to pick one company that is close and might pass them, that would be Tesla. So you take all these other Magnificent Seven stocks, you take any stock you want to talk about, and nobody is in the ballpark of Apple on that status except for Tesla. And most people who studied the return on investment credits, investment capital,
Capital.
people who study that feel that Tesla will in fact pass them.
Yeah, I think I would put myself in that camp. There's certainly the potential as the robotaxi business and the humanoid robot business gets underway.
Actually, those quotes are from prior to people taking those into consideration. So here you have a non-traditional auto manufacturer, which you would expect the required capital in order to build the business to be huge compared to the return. But Tesla, because of the way they do things, is second only to Apple in terms of that return. That is before we get to Robotaxi and Optimus.
Yeah. Yeah. It's going to be fascinating to watch in the
Right.
coming decade or so. This also from AJ showing the free cash flow for Amazon, highly variable in terms of the seasonality.
Mhm.
And then there was certainly a blip here, sort of post-pandemic, some heavy investment that brought their free cash flow down to below levels that we wouldn't have normally have expected.
Right. To negatives. Yeah.
Yeah, and if you recall, Amazon had a pretty tough stock performance during
Oh,
this period,
yes. Oh, yes.
right? And then AJ helpfully put Tesla on top of the same chart. So Tesla is a newer company. It's not as old as Amazon is.
Mhm.
And so if you adjust for that and map it out from when Tesla started versus when Amazon started, Tesla is not too dissimilar.
Right.
Okay. And so the question is, over time, can they, avoid this kind of cyclicality or the kind of seasonality in their cash flows?
Mhm. Mhm.
And that remains to be seen. This is interesting. Amazon's AWS business, their cloud computing business, over the last 12 months has generated 94 billion in revenue, which is more revenue than all but 466, sorry, more revenue than 466 companies in the S&P.
Yes.
There's only a handful of companies that would be larger than that one business unit for Amazon. So make no mistake, this is a big driver of Amazon's growth and profitability.
Yeah. So again, to make the comparison to Tesla, that is approximately Tesla's current sales, gross revenues.
Yeah,
Very close.
that's right. So as you know, Randy, we are big fans of solving mysteries on this show.
Yeah.
And so we have another one to solve. So we've talked about this before, that
Yes.
the Wilshire 5000 has a problem. They can't find 5,000 stocks to invest in,
Yeah.
right? There used to be over 8,000 companies. So the guys at Wilshire said, hey, let's create Wilshire 5000. We'll never have a problem finding 5,000 companies.
Right.
Well, there's only 4,642. This is as of
Wow.
22.
Wow.
So 43% decline in the number of stocks since 1996.
Yeah.
So what happened? Where'd they all go?
Well, the new companies are not going public. So the IPO market has been horrible for years. But even so, over the last 15 years, we've had these ridiculously low interest rates. So why in the world would anybody go out and do an IPO and get all of the nastiness that goes along with being a public company if you can borrow the money for 2%?
That's one explanation. I have another one for you.
Okay,
They were all acquired by the big tech companies.
here you go.
So I don't know over what time frame this is, but Google has acquired 263
Wow.
companies,
Yeah.
Microsoft 255, Apple 133, Meta 101, Amazon 98, and Nvidia just getting started 25.
That's almost 900 of the number. Now, of course, in that period of time, you've got a lot of new companies coming on board. I mean, a lot of new companies incorporating, not going IPO necessarily, but they're not going public. I think that, so this is kind of the balance. You got acquisitions,
Yeah.
lots and lots of acquisitions, but companies not going public for lots of reasons, including those that I think we talked about last time, which Elon has mentioned, which is just, it's just gotten horrible. in the United States, well, maybe worldwide, to be public. It's not not that great.
That's right. And I think it's also easy to forget when we talk about the Magnificent Seven, the big, seven large mega cap companies of which these companies are part of, including Tesla. Um, they have acquired a lot of companies that you're not just looking at
Yeah,
seven individual businesses. They are
right,
massive conglomerates of all kinds of different business lines.
right.
Um,
Google famously bought something called YouTube.
yes, that's right. And Facebook, now Meta, famously bought Instagram, which people thought they would just shut down because they saw it as competition.
Right.
Now it's a pretty important part of the company. So again, this is a chart I think we've shared before in terms of the impact of NVIDIA and what they're calling the Fabulous Three on the S&P 500. So as of April 26th, the S&P was up 6.3%, and 2.67% of that was from NVIDIA alone.
Yeah.
And then the other three, Amazon, Meta, and Microsoft, contributed collectively 1.2%, and all the other stocks in the S&P 2.4%. So these big companies have a big impact on the index.
Definitely dominating.
Yep. Okay, so just to highlight some recent quarterly earnings and so on. This is from Microsoft. Their revenue increased 17% over the last year to a new first quarter high of almost 62 billion. And their net income grew 20% year over year to 22 billion, their second highest quarter ever.
Hmm.
And their profit margins were pretty healthy, operating profit margins of 45%.
Hmm.
So Microsoft, even though it's making heavy investments in AI infrastructure, is doing pretty well from an operating standpoint.
To the point that they now, of course, are the number one CapEx company in the world. Yeah.
Yeah. Yes, in terms of market cap, yes.
I'm sorry,
Yep.
market cap in the world.
Yep. Google, their revenues were up 15% year over year to a new first quarter high of almost 81 billion. Net income rose 57% to 24 billion, and their operating margins were a lowly 32%, but up from 25% a year ago.
Hmm.
And to add, the cherry on the top, they approved their first quarterly dividend
Right.
and only $70 billion for share buybacks. That's kind of what you have to do when you run out of good ideas to invest the money. You just start buying back your own shares.
So I do have to put a slap back on the good ideas problem. I used to think that way too, but then it's not a matter of just good ideas. The good ideas have to be good enough that it will be relevant in terms of the size of the company.
Yeah, it
Because
gets tough.
if you're a $100 billion company and you buy something you think has a maximum revenue of 5 billion, nobody's going to pay any attention to it. It's going to just be, I mean, not only the market won't pay attention, but even your executive staff and the folks that are doing the analysis of how to spend money, they're not going to pay attention to that $5 billion company. So it's got to, in order to have a good idea, it has to be a good idea that will, let's say, be at least 10, 20% of revenues believably sometime in the future.
Yeah, it's a good thing that they haven't thought about energy storage or humanoid robots. But yeah, I guess self-driving vehicles, I guess they're involved with
Yes.
that. But yeah.
Yeah.
And this is from AJ again. I said this is AJ Corner
Oh,
today.
yeah.
This is kind of a nice chart. It says it contains an important lesson for investors. Even one of the biggest, or possibly the greatest, money printer of all time frequently experience quarter-on-quarter revenue declines and even the occasional year-on-year decline. Tesla investors should remember. And
Yes.
let's go to the next slide, which just blows this up a little bit. And you can see that there have been a couple of negative year-over-year revenue numbers
Hmm.
and many, many negative quarter-over-quarter
Right.
lines. So, this is a company that has pretty consistent revenues and earnings and so on, but even they have some fluctuation, and this should be expected.
Right. Well, especially they're in the advertising business, and advertising is always going to be something that is going to fluctuate based on what's happening in the economy.
That's right. And then not to leave out Meta, Meta announced their results and they sort of, I think frustrated a lot of people in terms of their CapEx spending. They're now projecting that they're going to spend between 35 and 40 billion this year.
Yes.
I would imagine most of that is going to be on their, well, the metaverse as well as their AI infrastructure.
Right,
Um, just as a point of comparison, Tesla spent $1 billion in the first quarter on their
right,
AI.
right.
So it's not just the sheer sum of money that matters, it's how you spend it and how you efficiently you use it.
Peace.
But Meta is certainly going all in on AI, as AJ says here.
Yes.
And this cartoon I thought was fantastic. This is my husband Frank. He's long Meta, and he looks a little frazzled, a little
A
burned.
little burned. Yeah, a little bit burned.
So it's good to know that there's cartoons on other companies' stocks besides Tesla. It's not just everybody making fun of Tesla. You have to look a little hard for it, but you can find these gems
Yes,
out there.
yes.
This one's interesting. This is looking at the small cap index, the Russell 2000 here in the middle of the page. So there's actually a little less than 2,000 companies, 1,918.
Uh-huh.
1,107 of those are profitable. And if you look at their last 12 months of net income, they're trading at a PE ratio of 15 times earnings.
Hmm.
Okay, so not too bad. But there's 811 of them in the index that have lost $108 billion in the last 12 months.
Hmm.
So when you combine all of them into this index, the PE ratio now for the entire index is more like 86.
Wow.
And they
Wow.
did the same thing here for the S&P 600, which is also another small cap index. And there the combined PE ratio goes from 14.8 to about 26. There's
Huh.
not quite as many unprofitable companies.
Right, right, right. Huh.
So it's a tough world to be a smaller small cap company. We call them small caps, but to your point a few weeks ago, there's still pretty big companies in here.
Yeah. 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 These are not small businesses. The
Yeah.
US government qualifies anything with 500 employees or less is a small business.
Mm. Yep. Anyway, I thought that was just an interesting fact regarding small caps. Let's move on to something even more bleak,
Oh, good.
right? And I thought this was kind of a cute cartoon. And with the Olympics coming up in Paris, instead of holding up this USA signs, we need to add USA IOU.
Yeah, yeah.
So we might see that in the stands in Paris, perhaps. But this is the US national debt. You can go to usdebtclock.org to see what the debt is, and you can actually watch it run up in real time. So we're now approaching 35 trillion of national debt.
Right.
And they calculate, the GDP here and the public debt to GDP ratio and so on, and they compare it to some other countries in the world.
Hmm.
So we are definitely the world leaders in debt. As a percent of GDP, we're not the world leader there.
Japan gets that. They get that one in spades.
They do. They're head and shoulders above everybody on that measure. With Italy also stretching out there
Yes.
at 172%.
Yep. Yep.
So this is a problem that's not going away. Some people argue whether it's a problem or not, but either way, the debt is mounting.
So the external debt to GDP ratio, we've got the public debt at 88%. External, does that mean external to the US or do you know?
External to the country. So this is why Japan, for example, has been able to fund such high debt because most of it's internally funded.
I see.
They're not relying on the generous nature of foreigners to fund the debt. If they did, they might not be able to have so much debt.
Okay.
So they're more in line or even in better shape than many other countries.
Right, right.
Yeah.
Interesting. Okay. Wow.
This brings us to one of our other favorite topics, and that's inflation. And here this guy is, looking pretty down. He's not quite realizing that the invisible inflation is taking money out of his pocket.
Mhm. Yes.
But I thought that was a pretty good way of explaining what inflation is. This week we had the ISM Manufacturing Prices Paid Index continuing to go up. And unfortunately, this measure has been a pretty good predictor of future inflation trends in the CPI.
Hmm.
It tends to be early.
Yeah.
And so in 2020, it went up before CPI did.
Mhm.
In 2022, it went down before CPI did. It even started going down in mid-21, but really went down in 2022. CPI then followed later, some months later. So this is an interesting one. It's not so great in terms of inflation expectations going forward.
Right.
Now, this is just manufacturing prices. This is not the entire economy, but nonetheless, this index in recent years at least has been
Right. Predictive.
pretty telling.
Right.
If you and I were a little bit younger, this might be us. Explain to me again why we're supposed to be surprised. Right? Every time you wind the box, the inflation joker, whatever it is, comes out.
Yeah.
Yeah. All right. On to jobs. US job openings maybe come down a little bit, holding at about 8.5 million. This is the lowest level since February of 2021.
Yep.
So it tells us that the heat is coming off the economy a little bit.
Mhm.
And another measure is the quits rate. How many people are walking into their job and saying, I quit?
Right.
They do that when they feel confident, when they know they can get a higher paying job or a better job somewhere else.
Right.
And that has come down. It's now the lowest level since August of 2020. So these are two signs that it's getting a little tough in the job market.
Yeah, yeah, I've talked about this on the channel before, but I still believe that this is involved in the unwinding of the post-pandemic situation, or the pandemic and post-pandemic situation. So during this crazy period where you see it going spiking and coming back down again, you had the employee was in control. They could they could dance around, go to the next job, the next job, the next job. They could get more money, get a something that they could do from home if that's what they preferred. And so there's a lot of activity. Well, at a certain point, you probably reach your apex. You probably get the job you want at the price you want. So there's going to be less likelihood of people quitting. So I think that's part of what's happening with the quits rate. And I also think on the job openings, what we had was a very large number of companies that were hoarding. They were hoarding employees, and they were keeping their job orders open, even though they didn't need anybody. And
Mm-hmm.
so they were collecting. They were collecting people's yeah,
Resumes?
resumes. That's the word. I'm in Montreal. I should be able to think of a French word. Anyway, they were collecting resumes, but they weren't even responding to any. And I think that is what we're seeing to a large degree, is people are like, okay, enough with that. We don't need to do that anymore. So some of that, I think, is what's going on. We'll see. I think we'll tell a lot more 6 months from now where we really come out on this.
Mm. Yep. We shall see. I have a new definition now for American football. It's the consumer. Kick me some more. Yeah, it's always tough on the consumers.
Yes.
Um, this one's interesting. This takes a look at the number of countries, and there's a sample of size of 100 here. I guess probably the 100 largest countries. Sorry if I said companies. 100 largest countries, and looks at whether or how many of them are experiencing deflation, which is defined by CPI less than zero, versus how many are experiencing hyperinflation, which is CPI greater than 10%.
Okay.
The blue line is hyperinflation. The gold line, yellow line is the deflation. And you can see that the blue line reached a peak. There were about half the countries, 50 of them, had inflation at one point greater than 10%
Right.
in 2023-ish. And now that number is down to about 15.
Right.
While the number of countries experiencing deflation has picked up from 0
Mhm.
now to looks like 6 or 7.
Right.
So this is just an interesting chart to see, when they converge.
Yeah. So interesting. Of course, deflation is not necessarily good. And for most of these countries, deflation wouldn't be good, because it's not going to be based on productivity. By the way, productivity numbers came out today. We got to check those out and see what happened.
Yep. Yeah, I don't have them in the slide deck today, unfortunately. Um, Speaking of rate cuts, do we still expect the Fed to cut rates?
That's
0.
not a 3. That's a 0. Sorry.
Oh,
I,
Zero.
I think zero this year. Yeah.
All right. Well, the market doesn't quite agree with you, but maybe they will. Apparently, the odds of no rate cuts right now is about 23%.
Right.
So maybe they will come to recognize your wisdom. But
Well,
certainly this measure has been moving up.
yeah, I think I talked about this in the morning show today. The what I think what Powell said basically is we're stuck. We can't do anything right now. And so therefore, if the numbers stay about where they are, he's not gonna be able to do anything next time either, or the next time or the next time. There's no real reason that I can see looking out. Now, news can always change. We could have oil prices drop like a rock, or oil prices go up like crazy. We could have, all kinds of things that could impact things. But over the remaining 5 months of the year, well, I'm sorry, 7 months of the year, it's hard to imagine things happening so fast that the Fed would be able to get 2 or 3 months of data that would allow them to make some decisions. So, yeah, right now I think we're looking at next year, if then, and I've also upped my percentage chance to 30% chance that we see a recession in the third quarter.
Okay. That sounds good. And I think the man in the desert would agree with you.
Okay.
Oh yeah. And higher for longer.
Yes,
As if the guy needs any more bad news.
right.
Um, Conventional wisdom is that you should sell in May
Yeah,
and buy again in October.
right.
Now, that historically may have worked reasonably well, but since the pandemic, the blue line, which is sell in May and buy in October, was ahead of the index.
Uh-huh.
But since the pandemic, the index has beaten that strategy.
Hmm.
So this year could be the exception again, where sell in May and buy in October makes sense, and maybe the blue line crosses the gold line here.
Yeah, but
But
it's
the
also
last few years it's been a bad strategy.
yeah, it's also an election year. Does that show it'd be too hard to figure that out quickly, but whether that impacts even the sell in May concept. Anyway,
Yeah. Yeah, that's a level of deep analysis, Randy, we don't quite do on this channel. It's more surface level. But yeah,
yes, if we could, it's kind of like the scientists have said, the brain and clouds, understanding clouds and understanding the brain are the two biggest things that scientists have not been able to do yet. I think the third thing is the stock market.
absolutely.
Too many different variables. Too many variables.
That's the combination of the brain and clouds
Right.
altogether. Yeah. And then of course I have a cartoon to go along with that previous chart. If the consensus is all leading on one side, then it's probably better fishing on the other side.
Uh-huh. This is a philosophy of this channel.
Yes. So instead of process, this should have your name on this boat. All right. From time to time, we update this chart, courtesy of Charlie at Creative Planning. Year to date, ranked by best performing asset.
Oh, yeah.
Bitcoin was up a lot more, but it's still up 43% year to date. Gold is up almost 11. Looking in this column here, the gray column, 2024. US growth stocks are up 6.6%. Commodities doing pretty well, up 6%. And so on down the line. We get to some negative numbers here in red, with the worst being long duration treasury. So you're talking about
Yeah,
30-year
yeah,
bonds down 10%.
right.
US REITs, real estate investment trusts, down 9. Investment grade bonds down 4.
Yeah.
And the total bond market down 3. So a pretty tough time for bonds in general, as well as real estate.
Yeah, it'd be interesting, to add to this chart would be interesting to take a look at some individual cases, like for instance, silver and what was the other one? What's the other one? Anyway, but silver, for instance, silver and copper, which
Mhm.
are kind of bellwether items as well. And both of them have done, I think, better than gold this year.
That could be correct, although I don't know as of recent days. This is as of 4:30, so
Yep.
yesterday. sorry, a couple days ago. Yep. And then I thought this was kind of interesting in trying to put things into perspective in terms of the relative size of different asset classes. This is global assets of around 900 trillion, and about a third of that is real estate. This large box here on the left.
So
The
global.
bond market is also massive. Sorry, Randy, I interrupted you.
No, I'm thinking. I'm thinking out loud. I'm sorry. Go ahead.
Bond market is also massive, about 300 trillion. The equity market, I think most people think of the equity market as being the biggest asset class in the
Yeah,
world. It's not. It's still big. In my book, 115 trillion is a pretty big market.
right.
And apparently we have about 120 trillion in
Mhm.
cash equivalents,
Right.
money markets, etc., bank deposits. Cars and collectibles, 6 trillion.
Hmm.
Art, 18.
Wow.
Um, Gold, 16 trillion. And then we've got Bitcoin on here at a trillion.
Got it. Okay.
So for as well as Bitcoin has done, if you look at that previous chart up, what was it? 2 million%.
Right.
That's still a tiny, tiny asset compared to all the others.
1/900th. Yeah.
Yeah. Anyway, I thought that was just
Yeah.
interesting to put things into perspective.
I would have certainly guessed real estate as being number one, but bonds being number two and close to real estate, I would have never thought.
Mm. Yep. Now, the interesting thing on here is, the world is moving to digital over time, right?
Sure.
The big companies of the world are companies that have digital services. Think about Google and Apple and so on. So the question is too, does money and investments move digital over time as well? Right. And if it does, then this little thing in the corner here could eat up more share over time.
Sure.
Anyway, that's another discussion, but throw it in there. Another great cartoon. There's nothing to say about this, but the bull and bear are in the arena. And right now, I guess the bear in this particular one is just clobbered the bull. But I'm sure there's another version of this where the bull has clobbered the bear. So
Sure. Yes, we can.
yeah. And I'm not sure if the crowd is happy or upset with this, but they're participating intently. All right, so back to the bond market. This has actually been one of the longest drawdowns in the bond market. We're going on 45 months now where the bond market has lost ground from its peak
Sure.
and has not yet recovered that prior high.
Right.
And compared to other periods of difficulty in the bond market, this is much, much longer. It's almost 3 times as long as the previous longest one
Right.
from 1980 to 1981. So we're at 45 months now of being down from the peak in the bond market. So if you think bonds are safe, secure investments and guaranteed return, think again. That has not been the case. And this chart shows actually the drawdown in the bond market over time. And you can see the maximum drawdown was 17%. Right now it's down just under 13.
Mhm.
This is, by the way, the US aggregate bond index. So it's kind of like the S&P 500 for the bond market,
Right.
Government bonds, corporate bonds, etc. And the previous biggest drawdown was 1980, almost 13%.
Right.
So normally, if you lose between 3 and 5% a year in the bond market, that's a bad year.
Yeah,
Well,
you could have maybe predicted that there would be something like this if you have 15 years of zero interest rates.
yeah,
That at some point that's not going to be true anymore.
that's
So,
right. That's right. Exactly right. All right. And here's a cartoon, I guess, for the times. But sometimes I identify as a bull.
it's
Says
sad.
the bear with a bull cap
Yes,
on.
yes.
This is something that's pretty scary, but it's no great mystery. We've known this for a long time, but global fertility rates are continuing to decline.
Yeah,
So in the world now, we are, just above the replacement rate of 2.1, but India has dipped below that. Uh, the US is below that. Japan is below that. South Korea is probably one of the worst in the world in terms of the fertility rates.
right.
I did some quick math that in 3 generations, the population of South Korea will be 1/10 the size that it is now if this continues.
Right. Yeah.
And in the United States, given our fertility rate, our population will be 1/2 of what it is now in 3 generations.
Generations. Right. Right. Yeah.
So,
A lot of ghost cities.
yeah. And this is why we need humanoid robots ASAP.
Or somebody to show some leadership. And at some level, somebody's got to show some leadership besides Elon Musk, being all by himself out there talking about this. Um, this is not it's such a crazy thing. I started talking about this 20 years ago. I've blogged about it, for 15 years, when I had my blog. Well, so that wouldn't be the whole 15 years, but let's say 10 years ago, I was blogging about it. Talked about it on this channel all year. Elon started talking about it, and finally it's getting some capture, because it's not, demographics is a funny thing. It's almost as inexorable as physics.
Yeah.
You can really predict into the future
And
based on what you've got now.
yep. And you would think if you threw money at the problem, it might help, right?
Right.
Incentivize people to have babies.
Right.
Well, in South Korea, that births in South Korea had dropped below 20,000 in February, the first time that threshold's been breached, despite its government spending 280 billion
Wow.
on child rearing incentives. So you can't even pay people to have kids
Right.
anymore.
Right. Yeah, I don't know how Singapore's program has worked. They were one of the first to start putting together a very substantial, I think $7,000, for each baby or whatever, when you had the child. And I don't know what the rest of the package looked like. It'd be interesting to see how their program is working.
Yeah. I think I have a potential solution.
Oh, okay.
Diamonds.
Diamonds.
Diamonds are so cheap now. This is not a chart of lithium prices or battery prices. This is a chart of diamond
Diamond
prices.
prices.
You can now make lab-grown diamonds
Oh, yeah.
for $1,300 a carat.
Yeah.
So, a lot of women like diamonds, and so now they're so cheap.
Yeah.
I'm joking here. Please don't get upset with me for my joke. But this is interesting because you can now grow a high quality diamond in a lab in 150 minutes
Yeah.
versus the natural process of 1 to 3 billion years.
Right.
So
And they're really good.
really good. Yeah. Anyway, couple of final cartoons. Inflation is like a box of chocolates, says Jay Powell. I thought that was pretty cute.
Oh, my.
And then finally, a history of the Fed funds rate since 1979. So Paul Volcker was famously quite tall at 6'7", and
Okay.
he dealt with very high rates. Greenspan was 5'11". The rates went down under his tenure. Ben Bernanke a little shorter at 5'8". Janet Yellen at 5 feet, rates at 0. But now Jay Powell, he's 6 feet. So what does that mean?
Yeah. Yeah, I get it. All right. This would be, I wonder if we can, place any bets based on that.
I think that's as good as a sure thing, just like the demographics. I think we can take that to the bank.
Oh my, oh my. All right. Well, what do you conclude from all this? I mean, it's one thing to throw all these charts up. Do you come to, have you got some conclusion that you can reach?
I leave the conclusions to the market, Randy. There's so many different things I suppose you could conclude. It also depends on the time frame that you're talking about,
Sure.
right? There's a lot of little different data points. You're looking at a mosaic of information. It's hard to reach any overarching conclusion, and if I did, I'd be wrong.
There you go. Well, what I'd love to hear from you next week, in addition to whatever else you find, is anything you can bring us on productivity, in terms of historical productivity numbers for the US, in terms of productivity versus GDP, those kinds of things. Anything that we can really, kind of take a deep dive into the productivity numbers.
I'll take a look at it. My initial response is productivity is really hard to measure.
Mhm.
right? And it usually falls out of the calculation of some other numbers,
Right.
which themselves are suspect,
Yes.
right? So it's a tough one. On one hand, you would think that all this technology is making everybody more productive, but we do have a thing called Facebook and TikTok and Instagram
Right.
that probably is making people a lot less productive in some ways. So I don't know where the offset of all that is. But I'm really excited about productivity enhancement in terms of what AI will do,
Right.
both in the robotaxi network and also with humanoid robots.
Right.
That is when I think we see productivity ramp up to levels that we've never seen before.
Exactly. No, there's no question about that. I'm kind of curious to see, first of all, the unwinding of the productivity problems of the COVID period. Uh,
Mhm.
Spoken a lot about that in the channel. There was huge productivity, just the natural emphasis where the management needed to look more at how can I find one more employee, or how can I find more product to sell, because I got an empty cart here. Now we've gone back to a normal time when management might be thinking more about how can we be more productive because we got enough products, we got enough employees. And as you lower the number of employees in the company, that should increase your productivity as well, as Elon has just done again. We'll see what that does for Tesla. But anyway, those are the kind, and there is this number, as you point out, which is, I guess, the units per dollar, units made per dollar of, or dollar of revenue in the GDP per
Dollar of output.
dollar of output per dollar of input, which those numbers I think are out today. So
Yeah, well, we'll dive into it. I'll get the research department working on it. I'll get Scott to make
thanks
some
so
beautiful
much.
charts.
That'll be great. Okay, as always, thank you for bringing us up to date on all of these different categories and for all of the humorous cartoons that sometimes are humorous, and yet, you're like, can I really laugh at that? It becomes hard. All right, Cern. Again, thank you so much. And to all of you out there, it's been great talking to you.
Thanks, Randy. Enjoy Canada.
Yeah, I will do my best. Whoops.